Hello and welcome back to Ajayastromoneyguru, your source for the latest updates and advanced analysis on various commodities and other instruments. I am Tushar Jain and today we have got a packed episode delving into the global equity and currency markets, the latest developments in crude oil prices and the fluctuating world of gold. Let's dive right in. Asian stock markets are starting the week on a cautious note as concerns in the Middle East cast a shadow over the financial landscape. The risk of a broader conflict in the region has put pressure on investor sentiment, with the backdrop of crucial data on US growth, inflation, and tech company earnings. The stakes are high. Tomorrow, in the US market, Microsoft results will be declared, so all eyes will be on the Microsoft's results. Bond markets are also in focus with US 10-year Treasury yields nearing 5%, which is impacting borrowing costs globally and challenging equity valuations. These developments have implications not only for Asia but also for markets worldwide. But if we see in the today's session, the bond markets and the Treasury yields are showing some relaxations from their highs of the last week. The situation in the Middle East, particularly the tensions between Israel and Gaza, is causing concern. Washington has issued warnings, and this geopolitical instability can have ripple effects on market. The recent surge in bond yields is a key factor impacting market dynamics. It's tightening monetary conditions without direct actions from the central bank. This has allowed the Federal Reserve to signal a likely hold on its policy meeting next week. Notably, there is a growing chance of rate cuts from May next year. This jump in yields is affecting equity evaluations and driving down major indices, while the VIX Fear Index is showing increased stock market volatility. Investors are closely watching the upcoming policy meetings of the European Central Bank and the Bank of Canada for guidance on future moves. These developments are adding layers of uncertainty to the market. Let's take a snapshot of global markets. Asian shares have slipped with MSCI's index outside Japan at its lowest in almost a year. China's blue chip index is also facing challenges. However, S&P 500 and Nasdaq futures shows optimism due to upcoming earnings season. Speaking of earnings, this week we are expecting reports from tech giants like Microsoft, Alphabet, Amazon, and Meta platforms. IBM and Intel are also on the docket. Strong consumer demand is expected to support these earnings with robust GDP growth projections. Now let's turn our attention to the world of crude oil. Recent developments in the Middle East, including the Israel-Hamas conflict, have impacted oil prices, but with aid convoys reaching with the Gaza Strip and diplomatic efforts, there is some relief. To ease supply pressure, the US has suspended sanctions on OPEC member Venezuela, a move aimed to stabilize oil supplies. These geopolitical tensions remind us of the fragility of the world's oil market. Shifting gears to gold, prices have been on roller coaster ride. They hit a 5-month peak due to the Middle East conflict. However, robust US Treasury yields have curbed demand for their safe haven asset. Investors are keeping a close eye on key economic data, including the US PCE price index, GDP figures, and central bank decisions. These factors are influencing gold's trajectory. That wraps up today's episode. Thank you for turning into Ajayastromoneyguru. Make sure to like and subscribe for more in-depth analysis on commodities and global markets. I am Tushar Jain and I'll see you in the next video.